Good evening, everybody. Richard, that's just me just playing my instruments just to get people comfortable. All right. Finally getting snow here tonight for the first time all year. Richie, yeah, you too. Happy New Year. David, where are you? I hope you're not in Ohio. Missouri, all right. I'll give her a few days. Okay. Well, the norm or the rule of thumb is that the first couple of days of trading coming out of the chute usually indicates what January is going to do. Now, I stress the word usually. There's always these general assumptions that you don't really have to pay attention to. You can acknowledge them, but the charts tell you what's actually happening. Yes. So, Bill, that used to be a concern for me. I'm thinking, oh, man, if the market's not up, they're not going to make any money. The nice thing about candlesticks is we can see which way the market is going and take advantage of the trades that are going with the trend. So this is why I've always stressed, not because of any great teaching factor, just experience says whenever you start seeing sell signals in the overbought area in the market, start looking to add short positions to the portfolio. Same scenario over here in the NASDAQ. Notice we had an evening star signal when we were getting up here in the overbought area. Nothing real concerning. Came back, did exactly what we suspected it might do, a J-hook pattern. But here's the candlestick logic. If you see a sell signal and they try to take it back up and you see another sell signal, just common sense says, whoops, the bears are winning. Close out long positions that don't look good and start adding shorts. And so the rhetorical answer is, do we always get big moves like this to the downside? The answer is no. But at least you've positioned yourself when you can see that the selling has occurred to be out of long positions and going short, to be in those trends or those moves that are heading in the direction that the signals told us we're probably moving. So it all boils down to you're not trying to project what the market might do. Just do what the market's telling you, and you're going to be way ahead. And this is, again, the voice of experience, that every time I thought it was going to do something and it did this, well, I wasn't going to change my attitude because I thought it was going to do this. Now I've learned the market is telling you what the market is doing. Yes, Bill, right now it looks like the NASDAQ could be at this resistance area. However, we don't have a buy signal yet, or a confirmed buy signal, number one. And number two, stochastics is still heading down. So oops, I read too far ahead. So we don't have anything yet to tell us that this downtrend is over. Now, if we start seeing positive trading tomorrow, yeah, that would kind of indicate this is acting as a support area. But you would also need to see that in the other indexes. Right now, we don't, what did I just say? You mean support? Did I say something different? We need to see the other indexes come. I said resistance. Sorry about that. So right now, possibly the S&P is using the 50 as support, except stochastics are heading down. That means we still need to see confirmation. If it trades positive, yeah, we can assume this is acting as a trending support level. Darren, how big a position? I don't know, what is that referring to? How many shares? Of what? My positions are all equal dollar amount. My option contracts are all equal dollar amount. So I'm not buying equal number of shares because obviously 1,000 shares of a $50 stock is a little bit more money than 1,000 shares of a $5 stock. I've got all my positions equal dollar amount. That way, each one of my positions is a unit of trading. So right now, with the markets kind of rolling over, as we can see, we don't have anything right now that would tell us that there's any bullish confidence in this market. We're closed below the T-line. So here's a little tidbits that you can use to tell you what the investor sentiment is likely to do. Notice up here in the overbought area, we had a gap up. Not bad, looked like a J-hook pattern setting up. But whenever we see a gap up in the overbought condition, no matter what the pattern is, we still want to be a little bit alerted to the fact that they're gapping up in the overbought index. I'm now reading index. That gap up alerts us to start watching for selling. Why? Because the Japanese race traders tell us that where do most people buy? They buy exuberantly at the top. Where was the spot that told us that the gap up was now not continuing a wave 3 of a J-hook, but was exuberance at the top? As soon as it came back down through the open of that candle, that was a pretty good indication. They weren't going in this direction. They were going in this direction. And when they came back down through the open of this candle, which, where do you think your next likely target was going to be? Right there to the T-line. Lack, it doesn't matter what the futures are doing right now. Oh, I guess I could have brought this up over here. Whoops, I did this wrong. J. Darn, I can't. Hold on, I'm still trying to figure out all the new stuff. I can take a gander here. Yeah, it looks like the Dow Futures are up 2 points, and the Dow up 71 points, the Nasdaq up 2 points. But that right now doesn't mean a hill of beans. Let's see, the Qs. Oh, that's goofy. There's where I see the YM. So the Dow Futures are up 67. Appears to be dropping a little bit. So the reason it doesn't mean anything right now is because this is just traders in the evening. Where it means something is about 5 to 10 minutes before the market opens. That'll tell you what the market's going to do. You could consider the Dow as a kind of a tweezer top up here. They weren't quite the same level, but they were very close. But the fact that we're trading back below the T-line is your most important factor at this point. So there wasn't very many things that were trading positive today. Now, Ford Motor Company, after it broke out through this level in wave 3, that's still acting strong. That's about all we got that was acting strong today. But it didn't matter because we had quite a few short positions on. So how do you trade tweezer tops? You don't trade tweezer tops. Tweezer top is just another indication that that's probably a top. And just another little confirmation factor. Can you explain the equal dollar more 100 shares of 5 equals 500? So would you only do 500 on anything? No. If I've got a $250,000 account and I'm going to put on 10 equal dollar amount positions, that means every trade I do is approximately $25,000. Now, if that means I'm buying a $50 stock, it means I'm only buying 500 shares. If I'm buying a $10 stock, I'm buying, how many? 2,500 shares. It's the dollar amount that we're trading, not the number of shares. Wanda, hold on to your individual stocks until I tell Jim to do the double line. Yes, so so that was based upon, the turnaround was based upon, the Fed's coming out with the announcement that they were probably going to raise interest rates at least twice this coming year. All right, that doesn't do, that was kind of built in, but what does everybody know about what the market does when the Feds are raising interest rates? The Dow or the markets usually go down. So as soon as they found out that they were raising interest rates, it didn't matter what was going on anyplace else. It changed investor sentiment, saying, the market's probably going to go down when they're raising interest rates, so that's why everybody sells off. Okay, I've got a whole bunch here, and a lot of it is, some of it is, when do you close out a position? So yesterday, this looked really good. Opened here and started trading up. Now here's just simple candlestick logic. When it was trading up, what color candle was it? It was a green candle. Let's make this bigger. And if it's a green candle after gapping up, who's in control of the trend? The bulls. So logic says if the bulls or the bears are able to knock out everything the bulls did and started trading back below where it opened, who's now in control? The bears. That's, if you bought somewhere up here, that's where you stopped out when it came back down through that level. Nicholas, so that's a good, so here's the illustration. Why am I pointing this out? Because most investors, like myself for years, didn't acknowledge the fact that no matter how good a trading program you have, and after trading every single trading program you can think of, Bollinger Bands, trend lines, trend channels, Fibonacci's, anything, candlesticks are the most logical and the most highly accurate trading system I've come across. and you've probably heard me say this before, I was told when I first got into the brokerage business that on a futures trade, if you could make 50% of your trades correct, you were going to make a fortune. So now I'm thinking, well, if I can make 70% of my trades, which is pretty much what I do with candlesticks, I'm going to make a fortune. Except the one factor you have to acknowledge is 30% of your trades are not going to be winners. Now, because I felt, oh man, I'm right most of the time, every time I got into a bad trade or was in a bad trade, my thought process was, oh, let's hang on to it and see if it's going to work, because I analyzed that it was going to work, until finally I realized that 1/3 of my trades aren't going to work. And that's the nice thing about candlestick analysis. It tells you when they're working, and it tells you when to get back out. How do we compare? How do they compare? Oh, Heiken Ashi is just kind of a vanillalized candle. I helped write some of the formulas for Heiken Ashi back in the 90s, I think. But Heiken Ashi is candlesticks, Carmen. All it is a vanillalized method of using candlesticks, which is much better if you're trading longer term. Yeah, so Heiken Ashi is, which is better? Again, Heiken Ashi is a derivative of candlesticks. Candlesticks is what's telling you what is actually happening. Heiken Ashi is just a method of analyzing what the candlesticks are doing. And it's a vanilla, if I can use the right word, vanillalized method of using candlesticks. It's easy to reach because each day they average the previous day's trading, and that's where the next open is. The most prolific combination is the T-line, the 8 exponential moving average in the candlestick signals, which has a very logical explanation. The candlestick signals are the graphic depiction of what's going on in investor sentiment. The T-line acts like a natural support and resistance level of human nature. So when you combine those two, you've got a very powerful probability factor. Let's see. Do you use a stock screening service? Robert, what do you mean by stock screening? There's 2 charting services that I recommend. Metastock, which is very good, has lots of good features on it, and TC2000 has a lot of good features. The only disadvantage of TC2000 is it only trades U.S. stocks, which in most cases that's going to be more than you can handle anyway. Anyways, Metastock trades all stock markets around the world, as well as futures, currencies, defined setups. Yes, Thinkorswim or TC2000. And we do, occasionally we do members training on a Tuesday or Wednesday night of how to use scanning softwares. Okay, I better get going here, or I'm going to be... So the things that we're also showing that the markets were selling off is, here's another indicator. This is the corporate bond funds. They're selling off, and the corporate bond funds are an indication of if investors are confident about buying corporate bonds, or if they don't think things are good, they'll get rid of the corporate bonds. Just another indicator. What do you think of the Icon Cloud? I've been told, or I've been asked to formulate things with candlestick analysis using the cloud, and the cloud is just too nebulous, if you'll pardon that expression. It's just an indication where things might go, where the candlestick charts are telling you exactly what's going on in investor sentiment. Okay, so let me go through a few things to see. We did Re was another example. Now here's one of why did Steve say he when? Oh, JC, we do in the members area. We do we can do scanning evenings. Everything that is relevant to candlestick analysis, scanning, stop losses, entry strategies, trend maintenance, when to take profits even though you haven't closed back below the T-line. All that stuff, which is all just common sense built into graphics, we've got them as trainings on our website in the members area, or if we get a number of people saying, well, we need to work on stop losses, usually on a Tuesday or Wednesday night, since we're doing Monday night for the members, Thursday night is open. That leaves Tuesday and Wednesday night open to do special trainings. And the advantage of these is that you can, if we're going through a specific topic, you can ask questions right as we're doing it. Stochastics are good, Norman, and some people like to use RSI, so it's whatever you prefer. Okay, so here's another example of when to close out a position. There was our buy, there was our J-hook pattern, there was our doji sandwich. What do we expect from the doji rule? Positive trading if it opens positive. Then look where we were up here. And this is one of the major features of human nature that's built into graphics, the T-line. The further away you move from the T-line, the higher the probability it's going to come back and test it. So you've got two places to close out this position. One, when it was up here, what can we visually see about the T-line? We're a good fur piece away from that T-line. That's when you flip to your 10-minute chart. If you didn't sell it up here, there was the logical place to put your stop, because logic says if it comes back down through the open after being that far away from the T-line, where do you think they're heading to? They're heading back to the T-line. Oh, is the 200 up there? I don't know why the 200 is not showing up over here. I don't know either. Add study. Moving average. Wait a minute. I don't need to do that. Let's see what's happening here. DJAI. No, the 200. I don't know why it's not on that chart. Okay. This is why knowing the signals. Julia, you were asked the difference between stochastics in the oversold area for a signal versus a pattern. If you see a candlestick buy signal in the oversold area, oversold meaning stochastics are below 20, the Japanese rice traders just have a very common sense rule. That's more than likely where the bulls are starting to step in. On the other hand, if you see I got to figure out something that, if you see a pattern breakout, more than likely it's going to break out when your stochastics are up in the overbought area. So that's the difference between the two. We're looking for buy signals in the oversold area. We're usually looking for pattern breakouts when the stochastics are in the overbought area. Can we use standard deviation on the T-line as a Bollinger Band to determine the point of exuberance? Sonny, you can. This is another great benefit of candlesticks. We know the signals work. And as you can see, my charts aren't really that cluttered up. So anything that you can add to your chart that enhances your ability to see when it's time to buy and when it's time to sell, put it on your chart. If it doesn't really help you after a couple weeks, take it back off. The reason for that is the more simple we can keep the logical levels or indicators that help us improve our trading, the better off we are without having the chart all cluttered up. But the most important factor of a candlestick chart is the signal and the patterns themselves. That's because the Japanese race traders have given us 400 years of evidence of what the signals tell us and what the patterns tell us. And it's not because of any computer calculated indicator. It's because human nature works the same way time after time. What about reversions to the mean of 21? Again, use whatever you want to, Raj. I use the T-line because coming from being a stockbroker and one of the worst investors in the world, when I started using candlesticks, it turned my trading around 180 degrees. Now I forgot what I was going to say when I finished that sentence. Oh, right now, if I use the signals and the T-line, I make very high probability trades or high correct trade ratios. All right, thank you, Mike. Patterns usually occur anywhere. It's when they break out. It's usually when the stochastics are in the overbought area. So you can see this pattern, kind of a fry pan bottom. I'll get to some better charts here. All right, let me just zip right along here. Now, on the short side, this is where you use the information. There's lots of buy signals and sell signals. However, when the market's moving in a trend, what are we looking for? We're looking for the strongest sell signals. So there's our bearish best friend, kind of a doji gap down. What's that tell you about the strength of the sellers? It tells you they're pretty strong. Now what do we got? Another doji. Now remember the doji rule. The doji rule is very simple. The price is usually going to move in the direction of how they open after a doji. So if this opens lower, what do we expect? For it to trade lower, and if it trades lower, what type of signal do we have? Another doji sandwich to the downside. So there was our sell signal. So we started shorting CDNA today. All right, it didn't do very much. However, if it opens lower, what do we got going on? Pretty good observation that when they came back up to the 50, there was our doji indecision and then confirmed sell closing below the T-line. And now if they open lower tomorrow, what do we got? A bearish doji sandwich. And what do we know about a bearish doji sandwich? It implies more downside. So now we can pretty much calculate wave 1, wave 2, going into wave 3 to the downside. So a breakout in an overbought situation is a good thing. Yes. Yes, that's why we have two sets that we identify. One, the candlestick signals are your ABCs of candlestick analysis. Now, out of the 50 or 60 signals, you only need to learn the 12 major signals that I've identified over the last 40 years. 6 bullish, 6 bearish. The others don't occur often enough to spend mental time and energy trying to learn them. At least glance through one of the books. I think they're in all 3 of my books. You just glance through every now and then just to recognize when you see a signal or pattern, even though it's not one of the major signals or patterns, that you do recognize it. And you might say, well, I don't know what that is, but I know it's a pattern. Let me go back and see what it means. But there's the 6 major signals, both on the bullish side and the bearish side. Then you've got patterns, and that's because human nature works the same way time after time, creating reoccurring patterns. Uh-oh. What did I just do there? So there's one of your strong signals, a bearish left-right combo. I can get rid of that, I guess. That's a sell signal. And where did it close? Back below the T-line. If it opened lower the next day, what's happening? We've got our bearish J-hook pattern. And if it opens lower tomorrow, even though we're getting close to the oversold area, what's that imply? Well, we've probably got a bearish doji sandwich, which means this trading day is likely to be the same as this trading day, which means we're now well into our wave 3 to the downside. Okay, we did pins. Oh. Observe the obvious. This is what we call a blue ice failure. Notice how they came down and fell through the ice. We can see the buy signal. There's your hammer in the oversold area. They started to bring it back up. And look where they took it to. And I mean, this is not magic. This is just visually witnessing where the sellers started to come back in. Right as it hit the 200, I'm sorry, the 50, and did a doji. And what do we know about the doji rule? Doji rule is it's going to move in the direction how they open after a doji. When they open it lower, what's that tell us? They failed at the 50. They're still heading down. Now what's it tell us? They sold off with great exuberance yesterday, and they're selling off a little bit more today. What do we expect? I hope I can segue into this without goofing up. What do we expect when we see that big selling? That's a change of investor sentiment. There's usually going to be some more downside. Richie, not necessarily. We're still looking at stochastics heading down. I'll have to pull that up later. Carmen, is that an evening star signal that we were looking at? Probably over here. Not a true evening star signal. Usually this is a big candle. I would still just consider it more of a doji bearish confirmation. Do we sell once it bounced back from the 50 and formed a doji? Bob, we wouldn't know that until the end of the day. Now, the other side of the coin is, if you're stretching to get up and it hits the 50, just like we did when we were too far away from the T-line, we flip to the 10-minute chart and see what are they doing on the 10-minute chart as they've hit the 50 on the daily. If they start trading back below the T-line on the 10-minute chart, it would take profits. What's the worst case scenario? The 10-minute chart turns around and heads back up, taking you back up through the 50, you can always buy back. But the probabilities say if they've hit the 50 and your 10-minute chart is showing selling, that's a good place to start taking profits. IIPR. Observe the obvious. There's your bearish left-right combo at a level everybody else is watching, the 50-day moving average. A big sell signal, close below the T-line. Where do you think your next target's going to be? Down here today, they hit the 200 and started bouncing back up. Is this time to start taking profits? Probably would have closed out half the position today. A left-right combo is a bearish engulfing signal or a bullish engulfing signal, except the previous day, instead of being a candle, is a doji. Anytime you see a doji incorporated into a signal, it usually is going to produce a much stronger result. So a bearish engulfing signal after a doji, that's called a bearish left-right combo. The little left jab of indecision, the big roundhouse right. So get that right. Oh, shoot, Bob. the signal. Please explain how sell signal is important when stochastics are oversold or below 20. They aren't. Remember, just simple logic. If you see a candlestick buy signal in the overbought area, it doesn't mean anything. If you see a candlestick sell signal in the oversold area, it doesn't really mean anything. The logic is, if you see a candlestick buy signal in the oversold area, that's a pretty good probability investor sentiment has changed. If you see a candlestick sell signal in the overbought area, that's much more relevant. All right, so we started going after Wolf the other day, because look at your best friend gap up, then a doji. If this had opened positive, what did we have? We had a doji sandwich breakout. But the fact that they opened it lower and started trading lower gave us a completely different analysis. They failed here at the 50. You close out the position. Now look what you've got going on. There's our evening star signal, followed by a doji. And again, what's our doji rule? If it opens lower, it's going to trade lower. Why would we suspect it might trade lower? Number one, you've got a strong sell signal. Number two, you're closed below the T line. And three, if it opens lower, the doji rule says it's going to trade lower, and your stochastics are heading down. Where would you think this next move might be? Wave 1, wave 2 that failed at the 50, wave 3, I don't know if there's a 200 down here, I guess not. Wave 3 usually is the same magnitude as wave 1. So this allows you to start buying puts or going short immediately with a high degree of probability that it's going to be going in a downward direction. For day trading and swing trading, what time frame do you consider to enter? I usually day trade futures, just because I don't have time to sit and watch most of the day because I got so many other things going on. So I'll use my 10-minute chart as my bellwether and then flop down to my 5-minute when I'm ready to do a trade. Is your stochastic default settings or any? No. My stochastics are 12-3-3. And that's not anything magical. Sometime about 40 years ago, I was sitting in my living room. They had just started bringing, and that's where I had my desk. They just started bringing candlesticks online. So one night I said, well, they normally use 14.55, but that seems a little bit slower since I'm a swing trader. So I just tweaked for about 20 minutes one night. Use 14.31, 14.52, 12.45, and finally came up with 12.33, which kind of coincided with when there was a top and when there was a bottom, and it works pretty well. Now, Joey, yeah. Fortunately, now I've got a big office down in the basement, but it's nice paneled and nice fireplace. Okay, now I got to get moving. All right, let's take a look at real quick at the biggies. Then we'll take a look at some that are acting well. So Nvidia, as you can see, you're still in a downtrend. Apple, when it failed, I can move this. Nope, get rid of it. When it failed right about here and closed below the T-line, we got a very simple T-line rule. If you're trading below the T-line, after a sell signal, it's kind of your dark cloud right up here on Apple, and a close below the T-line, stochastics heading down, you've got an extremely high probability that you're heading in a downward direction. Tesla. So again, this is not rocket science. This is just probabilities of what happens in human nature, which the Japanese race traders obviously have developed for us over the last 400 years or identified for us. Tesla, Bearish harami. A harami is one of your 12 major signals. And where did it occur? What's a bearish harami tell us? The buying has stopped. And where did it stop? Right about the same level it stopped before. Now you're trading below the T-line with stochastics heading down. What's the assumption? As long as you're below the T-line, you're still in a downtrend. Could you illustrate how signals combine into a first-time shorting pattern, then reshort a second time? Oh, VG, we can do that some night. Let me take a quick gander here. Well, that's because there's your dark cloud. They started bringing it back up. There's your hanging man, confirmed. So again, just very simple. If one signal tells you the bears are starting to take control, two signals definitely tell you the bears are taking control. Tesla, if I'm trading daily charts, does a good weekly chart pattern give a higher probability of a setup or a daily chart? Should I stick? No, stay with your daily charts unless you're planning to hold longer term. That's when your weekly charts are a little bit more applicable. So here's the obvious. That's telling you there's a change of investor sentiment. Hanging man, shooting star doji, close below the T-line. What's your trajectory? Wave 1, failure, wave 2, going into wave 3. So this is the advantage of seeing what a specific stock is doing. If it's starting to sell off, and you can see the market selling off, that's just adding that much more oomph that you're in the right direction at the right time. All right, so here's some charts. Oh, we're way behind schedule. Yep. Ordering pizza. We're going to be here for a while. Here is an example of, this was a very good chart. It opened here and started trading up, breaking out. If you were buying on this day, because you're doing kind of a doji sandwich, this is what it's telling you. You should be buying. However, what do we know about what the chart is telling us about investor sentiment? As soon as it comes back down through the open, what's it tell you about the bullish strength? It's not there. You close out the position. So now look for a bobble failure pattern, or is it a blue ice failure? VG, you know better. We should be doing individual stocks. I would stay short. Why? Because you've got a sell signal, your stochastics are heading down, and you're still trading below the T-line. As a matter of fact, the T-line acted as resistance today. Is multiple time frame confluence needed for swing trading? Not necessarily. The only time I use multiple time frames is when you're starting to move too far away from the T-line, not on this chart, but on charts where all of a sudden you're shooting too far away from the T-line, then I'll flip to my, if that's my swing trade, then I'll flip to my 10-minute chart to make sure it stays above the 3 or the 10-minute T-line. So again, that's just simple logic that if something like this, if you're way up here and you got a huge profit, the first thing you've got to acknowledge is look how far away you are from the T-line. So you're up here. I probably can't get back to those 10-minute charts, but if it was running up like this, I'm flipping to my 10-minute chart, and as soon as I see a sell signal and it coming down through the 10-minute T-line, I'm taking profits, because where do you think the next likely target could be? Back to the T-line. Uh, Julie, Julia, it's better to lose a wee little bit than a whole lot. Again, I now can acknowledge to myself mentally, there's going to be trades where I don't make any money. But I want to get out of the old sage advice where everybody tells you cut your losses short and let your profits run, but they never tell you how to cut your losses short and let your profits run. Well, Candlestick, simple logic helps you identify that and turn that into a good discipline. So now this is what we're looking at. Look at all the buy signals that occurred here. There's your cradle pattern. That's one of your candlestick patterns. There's your headboard, there's your bed, and there's your footboard. And then notice what happened after the footboard started. First of all, you're above the T-line. Now you've got a doji sandwich. What do we expect from a doji sandwich? More upside. Now we've got a double doji setup. What do we look for on a double doji setup? If it opens positive and trades positive, this candle right here is usually going to be the same magnitude as this candle right here. All buy signals. So that makes this an extremely high probability bullish trade. No, stochastics don't have divergences. Stochastics are only the graphics or the the evaluation of what's happening in the trend right now. So the trend right here, stochastics right here, has nothing to do with what's going on in investor sentiment right here. So there's no divergences in stochastics. All you use stochastics for is to tell you whether you're overbought or oversold. What happened previously has nothing to do with what's going on right now. Sometimes you cut your losses and the profit refuses to run or begin to cut themselves also. Funny, I don't. Yeah, so I don't know what you said there, Sonny. Okay. So this is where you put 2 plus 2 into your analysis. Look what we had in VET today. Had a trend kicker signal. Opened here, closed here, gapped up and went the opposite direction. That in itself is a good bullish signal. What's the pattern? There's wave 1, there's wave 2, and look where wave 2 supported, right smack dab off the T-line and started back up. That gives us a much more clear analysis that the T-line's acting as support and there's a J-hook pattern in progress. What about divergences between stochastics and the price of the stock? There is no divergences because stochastics are based upon what's happening in the price of the stock. If you've got something that can give me an example, but yeah, stochastics are related to what the stock price is doing. And don't try to overanalyze this. All we're doing is taking the initial signal and pattern. This is called a bullish flutter kicker signal. We know a kicker signal is your strongest signal. It opens here, closes here. The next day they open at or above the previous day's open and go the opposite direction. Well, this one had a doji in between. So what's our doji rule? The price is usually going to move in the direction of how they open after a doji. In this case, it started trading positive. So if you took out this little flutter of the bullish flutter kicker signal, you basically have a kicker signal. That's true too, Bill. Yep. And the biggest faux pas that most people have in their trading is their own emotions. Now this is a signal that went bad. Earlier in the day, you had a kicker signal because it opened here and started trading up in Bed Bath & Beyond. But as soon as it came back down through this open, what did that tell you about your kicker signal? It wasn't there anymore. You close it right back out. So if you can learn what the signals tell you when the bulls are in control, and you also can see when the bulls aren't in control anymore, you're going to get out of your bad trades very quickly and have that money to go on to something that's working. Mike, or as Yogi Berra said, that 90% of this game is half mental. This will be recorded. Yes, these are all recorded. You do not trade day trade and swing trade and all. No, I swing trade. All my trades are usually 2 to 10 trading days. If I'm day trading, it's usually over in the futures, and that's based upon everybody's own schedule. Obviously, if you're at work most of the day, you can't day trade. So most of my charts, most of my trades last anywhere from 2 to 10 trading days. If you bought early in the day, when would you have sold it today? If I had bought this here, as soon as it came back down through the open, I would have closed it out. Because as soon as it, if it opened here and trade here, what color is your candle? It's a green candle. As soon as it comes back down through here, what color is your candle? Red. And what's that tell you? The bears are in control. All right, Carmen, let's see. All right, let's go through some of these real quick. Pump was acting well early in the day. Notice where it opened. This is what we call a trend kicker signal. This candle opened here, closed here. They gapped it up today and went the opposite direction. What's that imply? There's more upside. On 10-minute charts, there are a lot of red and green candles. So how do you know which one is the right buy or sell? The signals. And the signals work just as well on a, let me get to something that I can show you. I was short soybean or wheat today. So that was our trading day. So here's what your 10-minute chart looked like. So you trade the 10-minute chart. When was it time to take profits? Well, down here we started taking profits because it came back up above the T-line. Why were we short in the first place? Because the daily chart said we failed at the 50. Stochastics were still heading down. We were heading lower. I use the 10-minute chart as my bellwether chart. And then if I get ready to do something, then all I have to do is flip to my 5-minute chart and say, all right, the 5-minute chart's still working, which means it's not affecting my 10-minute chart. So it's still time to go short. I'm going to start zipping through some of these so some of you don't start dozing off. So here's another potential trend kicker signal. This was setting up nicely, but it didn't do anything. If I was buying this one, I'd put a buy stop right there, because if it comes up through there, what's it telling us? They're still confirming this trend kicker signal, number one, and this is what we call a bobble breakout. There's your J-hook pattern, but it's bobbling, or bobbled when it hit the 50. Now it's coming back up through. And what was the buy signals? These are part of your 12 major signals. An inverted hammer, an inverted hammer. And if you see some of my these presentations long enough, you know that on an inverted hammer, one of the 12 major signals, that if it opens positive the next day, the probabilities, and again, this is unofficial, this is me just observing 40 years of candlestick trading, if it opens positive, you've probably got a 95% probability or greater that you're going to be heading higher. It's an extremely high probability trade setup. Weibo. Now this is your pattern. You can see the big fry pan bottom. Now I'm going to skip down because notice what this did today. That was a nice fry pan bottom. Reggie. That's a nice fry pan bottom. Traded up nicely today. DPT, there was a nice fry pan bottom and probably even a bigger, yeah, no. That's probably not the best one. That might not even be the right signal. RELL. Nice fry pan bottom. Had a nice up day. Nice fry pan bottom. Good up day. Now, as you're seeing this, I hope you can see one very obvious result of these fry pan bottoms. They were all trading positive on a day when the markets were selling off still. That's one of the major reasons why you want to use patterns, because this is not a signal reversal. This is a buildup of investor sentiment creating the pattern. So there's three major advantages to buying the patterns. One, an extremely high probability it's heading in the right direction. Two, the magnitude of the move of the pattern breakout is extremely strong. And three, if the market turns and starts going against you, usually the pattern will still continue at least long enough for you to come out without getting a big whack against your profitability. All right, let's see. All right, so that was to illustrate the fact that when you use candlestick patterns, it's because of investor sentiment doing the same thing time after time. And this is one element that we always advocate. There's not tons, there's a good number of candlestick signals and patterns. Now, obviously, you want to know the ABCs, your bread and butter, your bricks and mortar. But there's patterns. This is what we call the message. Notice that this gapped up, but that's not a pretty picture. That's pretty ugly. So most people wouldn't pay attention to it, except there was a message in that move today. People were trying to get into this with great enthusiasm. So what do? We wait to see when the profit taking is over and then start buying. And usually the message was there's strong buying, there's profit taking. We're waiting to see when the profit taking is over. Could be a doji, a hammer, a bullish harami, something telling you the selling has stopped, and then you start buying. Marshall, I kept looking at that one. Yes, that's kind of your message also. Today may have told you that message, the profit taking is over. Now you can start looking to buy this one. And notice what boosted this big move. Look at your little slow curve fry pan bottom setup. Things were building up for some reason. We may not know the reason. All we're doing is buying the charts that tell us something's going on. CCIX, this is what we call a stick sandwich. Let's make this a little bit bigger. Big up day, big down day, big up day. Stick sandwich, one of the Japanese signals. If this opens positive, pretty good confirmation that you're heading higher. And Whoops, where did that go? Yeah. That's your J-hook pattern. Big move, and notice where they pulled back to. Right smack dab to the T-line. Now, when I say right smack dab to the T-line, for you new folks in here, the T-line, the fact that it moved right back to the T-line is something we can identify quite often as being our support and resistance level. And why is that relevant? Because nobody has the T-line on their charts. So it's not like everybody's waiting for it to come back to this level because nobody has that indicator. We just know that the 8 exponential moving average works as a natural support and resistance level of human nature. What kind of sandwich? Stick sandwich, S-T-I-C-K, stick. Let's see, ever since we came out of the chute on Monday, the oils are acting strong. So when you see something like this, there's your doji sandwich breakout. What are the probabilities? Well, we know there's usually more upside after a doji sandwich. And where did it all occur? Right here at this breakout level. So what can we assume? Wave 1, wave 2. Now we're into a new wave, going into wave 3. Esti, kind of your trend kicker right here at the breakout level, fry pan bottom. Another energy company's strong. We did VET already. More than likely we'll see VET on the recommended list tomorrow, because where's our next likely target? Wave 1, wave 2, wave 3 up here somewhere. Last 3 bars were long to form stick sandwich. Yes. They're usually 3 big days, 1 big up day, 1 big down day, and 1 big up day. And Build-A-Bear, this is observe the obvious. Look what happened when they pulled back to the 50. Look at all the indecision here. And what tells you that the indecision is gone? When they start buying and closing above the T-line. So this is why we call it observe the obvious. You're in the oversold area. You're seeing indecisive trading. Now you see that indecisive trading confirmed. So you've got a bunch of dojis. Remember what a doji represents, indecision. So if one doji means indecision, a series of dojis means greater indecision. And this candle right here told you what their decision was. They're taking it up. Is a stick sandwich better than a doji sandwich? What's our other sandwich? Stick sandwich. There's one more sandwich. No, that's right, the Dagwood and the McMuffin. Okay. All right, so this one popped today. They brought this up pretty hard on a reversal. So that's kind of your cradle pattern. Now this is for the more aggressive. So how do you trade this one from here? This one, whoa, I'd be trading off my 10-minute chart. Now after hours, it traded up here to 65. Now it's trading back to about 58.60. So essentially what we're going to be watching is to see if it does a J-hook pattern tomorrow. Oh, that's the 5-minute chart. Oh, that's what we were doing. So this is what the 10-minute chart did today. Now it's kind of pulled back after hitting 65. But again, for the more aggressive trader, this is what we're looking for based upon candlestick signals. That's a definite reversal. Now we have to see how what they do from that point. Oh, MY. Well, whose handwriting is this? Oh, for crying out loud. What is that symbol? MYW V. I thought I had a good one to segue right into. All right, on the other side, because we expect, and I'm sorry I've kept this going on so long, if we anticipate more downside, things that look like they're trading lower, like Myra, if this one opens lower tomorrow, what do you got going on? A bearish doji sandwich telling you wave 1, wave 2, failure at the 200, wave 3. Riot, if this opens lower tomorrow, what do you got going on? Wave 1, wave 2, look at your evening star signal with a best friend pushed to the downside. If this opens lower tomorrow, wave 1, wave 2, wave 3. So this is more of an example of when you see those gap downs, that's what we're looking for. Now, a lot of people in the chat room today were finding buy signals or sell signals, but they weren't really anything to change the trend. What we want to find are the ones that have a definite oh, crying out loud. Have a definite force to the downside. So Schnitzer steel, here's your shooting star gap down. Failure to hold this level. What can we anticipate? Probably a lot more downside. We're looking for the things that have a lot of force to the downside. Oops, and I was showing this one as an illustration where you got a kicker or kicker signal. If it opened here and traded up here, as soon as it came back down, this is Bed Bath & Beyond. As soon as it came back down through the open, that destroyed your kicker signal. You closed it out right away. I'm going to try to go through these pretty quick. So there's a left-right combo. Remember your doji, bearish engulfing, gap down. Where are you right now? You're trading back below this level. What can we anticipate if it opens lower? A bearish doji sandwich giving you the same magnitude candle as this. What's that tell you about your support level? It's not there anymore. Zillow, if it opens lower tomorrow, bearish doji sandwich, you could be shorting it. Wolf, if this opens lower tomorrow, remember our McMuffin is a morning star signal followed by a doji sandwich or a morning sandwich. And a Dagwood is an evening star signal followed by a doji sandwich or your evening sandwich. So if this opens lower tomorrow, what can we expect? That candle right there is going to be the same magnitude as that candle right there. Is there any usual relationship between wave 1 and wave 2? No. Wave 1 is usually just counting the waves. Wave 1, wave 2, wave 3 is usually going to be the same magnitude as wave 1. That could be a good strong short. We've still short half a position on this one. There's your bearish engulfing signal up here. Now, a bearish engulfing signal is relevant, as we saw over here. A bearish engulfing signal right here is relevant because it's a bearish signal. And where did it occur? Right smack dab at the same place the last sell signal occurred. You can, Bill, you can put anything you want to on the chart. if I see whoops, I don't want to do that. If I see something that is like a trend and I think it's going to bounce back up, yeah, I'll throw the Fibonacci numbers on. What are my targets? Moving averages and Fibonacci's. So here is a perfect example that once you get into a bearish trade or a bullish trade, you've got a very simple parameter. In this case, look at our bearish engulfing, then a bearish doji sandwich, and a close below the T-line. So what are all the factors on that trade? 1, we're closing below the T-line. 2, it's a bearish doji sandwich. Expect more downside. We're closing below the T-line. Expect more downside. Now, how long do you stay short on something like this? Until you see a candlestick buy signal and a close above the T-line, or if you're starting to move too far away from the T-line, then you flip to your 10-minute chart. Can you go over the options you use to short a stock if not using margin? Andrew, usually you have to do it in a margin account. The other option you have is buying puts if you're trading options. Or, well, then you get a little bit more, what do I say, homogenized. You can buy a short fund, which means the fund will go up as the short goes down. Just a straight put, you can buy a straight put, or you can buy a put spread. Those are all the option strategies. That's another session we do, is when to use straight options and when do you use spreads or a combination of both. We do that in the members session on Tuesday or Wednesday nights. Look at your kind of your bearish belt hold signal. They gapped it up and brought it back down. What's that imply? The sellers are still in control. Big bearish engulfing signal. What did that tell us about this uptrend? Well, there's your shooting star. There's your bearish engulfing. That's when you can start shorting. There you go. EHTH. Observe the obvious. There's your little shooting star close below the T-line. What can we anticipate? Wave 1, wave 2, wave 3 to the downside. And I've got a bunch more, but they all look the same. TRHC. Now this is where you can add some probability factor. Look where your evening star signal occurred. An evening star signal was a big up day, a day of indecision. The third day closed more than halfway down this candle. And notice everything that we can see on this chart that tell us that they couldn't get through the 50. Obviously, an evening star signal right at that level. Then today, they brought it up right to the 50 and failed and took it back down. And they started selling right at the same place they started selling before. What's a logical assumption on this chart? They're heading down, and more than likely this area is your next target. So nothing that we are doing is it based upon formulas or any technical analysis. It's just reading the graphs or reading what investor sentiment is doing. Clarence, I would start with the green one. High profit candlestick patterns. And then I would go back and read the first one, which is published by Wiley & Son. And when you've got everything pretty much in your head, the only flaw that you're going to have, which again, this is from the voice of experience, is our own emotions. Then read the third one, how to eliminate your emotions using candlestick signals. Okay. So there's a couple of charts that will probably be recommended tomorrow. That's got a nice fry pan bottom coming out of a cradle, doji sandwiches. And the fact that if it starts trading positive, it's not going to be moving up 3, 5, 7, 12%. If it moves from here to here, that's a good 35, 40%. So not only do we have the visual capability of seeing which way something's moving, we can also calculate where the targets are to see which ones have the best upside potential as far as returns. Okay, I guess that's about all I've got for tonight. Here's the next one that I've got a little star next to is DNAY J-hook pattern. Why is that relevant? Because if this is wave 1, which is approximately 5 points, 5 points from here puts you up into about the $14 range, or giving you about a 40 or 50% upside potential. Okay, are there any general questions on candlesticks? If not, up some chewing ice. Jim, go ahead and do the double line. And in 4.3 seconds, do the next double line. Okay, let's swing up here. Nvidia. I'll try to do all these fast. I would stay short, use the T-line as your stop. That is going to be one that I'll probably recommend to be buying this one on positive trading with the expectation we're going into wave 3. San Juan Basin, you could be buying this one, just don't let it close back. Yeah, you got both of those characteristics, a fry pan bottom and a bobble type breakout. There's a wee little teeny gap right here, at least that puts you in the right direction. Vert, if you're long, you just stay long. Broke out through this level. You can see the little mini J-hook. Possible fry pan bottom breakout, yes. All right, did that. What do you trade with futures? I don't trade the E-minis. What is that? PVZ? What do I need? EPZAF? Two? Nah, I don't trade the E-minis. But when I used to trade the E-minis, I used a 1 minute, 3 minute, 10 minute combination. Jake, yes. Markets are probably, as long as they're trading below the T-line, we got to assume the downtrend. AT&T. This is one of the most boringest stocks to trade, but if you like it, notice you had a gap up, shooting star, now bearish. If this opens lower tomorrow, it's at least coming back to test the T-line. And if it doesn't hold there, it's coming back to test the 50. Oops. Taiwan. That is a one that is going to be pretty much trouble. Notice when they gapped it up, look where they opened it yesterday. Below the previous day's open. Where do you think they were taking it back to? Back to the T-line. Now, if you're long, it has to stay above the T-line. But that's kind of a whipsawy chart at this point. 10, you get ready to short this one if it opens lower, giving you a bearish doji sandwich. CFV. This one you can short also on weakness. If it trades positive, I wouldn't be long or short. It needs to open lower and trade lower to do anything with it. This is the type that you try to find. This is why anytime you close below the T-line and you were long, you close it out because the probabilities have gone against you. Just the fact that you're closing below the T-line dramatically changes the probabilities of your trend direction, and these are the type of things you can get slumped in if you've stayed long. Now, if you went short, obviously this is what you're looking for, is that type of price move. AutoZone, this one I would not be long or short. Right now there's no direction. You don't know which way it's going to go. So if you don't have any clue of which way something's going to go based upon your candlestick chart, close it out and go find a chart where you have much better analysis. Remember, every single day, whether the market's going up or down, you've got 5, 10, 15, 20 good chart setups. If you're sitting in one and you don't know what it's doing, that negates the whole purpose of using candlestick analysis. Go to some place where you can see what it should be doing. Chipotle, got to be careful here. You're not quite in the oversold area, but you did a bullish harami today, right about the same level they bottomed out before with a bullish harami. So if I was short and they open this positive tomorrow, I'd probably cover my short position. Now that's also going to be a function of what are they doing with the markets tomorrow. And right now it's showing that the Dow is going to be opening up about 56, but it's still trading below the T-line. And again, tonight's futures don't mean a hill of beans until we get to 10 minutes before the markets open. In talking about gaps, can we go back to the last one in a chart that might be a year or so ago? Oh boy, Julia, I don't know. If the question is, won't gaps get filled? Yes, all gaps get filled, but they might not get filled this month or next year. But we're not worried about that. We're more concerned about what the chart is telling us right now. That's one of your 12 major signals, a hanging man. Hanging man, evening star signal. Here's another one that you could be ready to short if it opens weaker tomorrow, giving you a bearish doji sandwich. Where's your next likely target? Right here, and eventually down here. CDEV. You stay long. Except the silver went bad today. Silver sold off, and gold. Which one? Gold sold off pretty hard today. So you want to probably be out of the gold and silver stocks. On the long side anyways. I forget which one we were looking at. Oh, CDEV. Yeah, so if this opens lower tomorrow, I'd close it out. IAU, same scenario. Oh, that is silver. You could probably be shorting it now. Hospital Corp, big shooting star, one of your 12 major signals. I'd be ready to short this one on weakness tomorrow with the anticipation they're bringing back to test the 50. Domino's, stay short. Even though you had a positive trading day, it's not a signal. So if I was short, I'd have a safety stop right here. If it opens weaker tomorrow, you can still short it. That tells you the 50 is not going to act as a support level. Clorox, just stay long. Sherwin-Williams. This one, not very exciting. It's another institutional trader also. But if this opens lower tomorrow, you can short it because that shows you the 50 and this level is not acting as support. And there's your left-right combo on ENPH. Wave 1, Wave 2, you can see failed at the T-line. Wave 3 in progress. Boeing, notice where it pulled back to, right smack dab to the T-line and the 50. This one, if it trades lower tomorrow, I'd close it out and wait to see if it's going to support at the 50. Right now, it doesn't look like a very attractive chart unless they open it way positive. And Salesforce, you could short this one if it opens lower tomorrow. Wave 1, Wave 2, left-right combo gap down, going into Wave 3. Microsoft, if you're short, you can stay short. It doesn't move around a whole lot percentage-wise, but at least right now you can see that it's heading in a southerly direction. And Sedge, if this opens lower, Wave 1, Wave 2, Barry's J-hook pattern, putting you into Wave 3. BTCS. This one has to open positive and trade positive. You've got your kind of best friend kicker, little mini kicker type signal. You can stay long as it stays above the T-line, let alone the 3 T-line, which is this little green line. But it definitely needs to show strength. You don't want to see it coming back down toward the T-line. Ford held up well. You stay long on this one. We're still holding this one long term. And Sophie, be ready to short this one on a lower open tomorrow. Telling you this level is not holding. Wave 1, Wave 2, going into Wave 3. William, let's see. If you will email, Jim, can you put Abraham's email information in so that William can see how to become a member of an exclusive, not exclusive, Candlestick Forum. We have a chat room that's open every day, which is in this format right here. You've got a lot of people in there that already have become very good at candlestick trading. So it gives you 2 opportunities to, 1, learn how to identify and utilize candlesticks much more quicker when you've got people around helping you. And 2, you're going to see a constant supply of good trades. And not only see the constant supply of good trades, if somebody says, oh, look at XYZ, it's got a good chart, you can always say, well, what's on that chart that makes it look good? And say, well, it's doing a J-hook pattern or it's doing a bobble breakout. So you learn a heck of a lot quicker that way. ISGS, you can stay long on this one. Not real definitive at this point. And Clover, I would say you could go short, but it's below $5. Right now, you don't want to be long on this one. Is that it? ESH22. No. ESAH22. No. Darn. EPZH22. No. Richie, I'm sorry. I actually show how to trade this. I think it's EPZ. E-minis. Why is it not showing up? Yeah. I'm sorry, can't get the charts on it. Will you ever give a course on trading futures? Yeah. Yeah, that's the session we do, and it's very simple. We can do that. We usually do that in the members room. We're going to be doing a lot of the members room training, which are all free to members. Now that the snow is hit, we can't play outside as much anymore. Advanced micro. Here's your bearish engulfing signal. If this opens lower, what's it telling us? We've got another wave to the downside. Quantum scape is nothing right now. We've closed out our long-term holds, waiting for the next strong buy signal. And Target. Target did a belt hold. A belt hold is where they gap way out of the trading range and come back up into the trading range. The Japanese race traders describe it as two sumo wrestlers fighting. One's trying to back out of the ring. The other one grabs his belt and pulls them back in, and they're back to fighting. We did Ford, would mean you could still be buying Target on positive trading because they took out a lot of sellers today. Ford, you just stay long. When the big financials are not trading strong, the market's not going to trade strong. Now, they did bring Goldman back up above the T-line. It's not a good chart. I wouldn't be long or short Goldman right now. And it's also telling us there's really no trend, which is exactly what's going on in the market. Are your swing trade charts 90-day charts? No. The charts don't really matter. What I'm really concerned about is what's happening here. Whether I make it a big chart like this or a much smaller chart doesn't really matter. I just want to see what's happening now and then be able to see kind of what was going on in the past. The T-line is your own indicator, I'm assuming, so we would have to get involved in one of your services to be able to use this indicator. No and no. The nice thing about candlestick analysis is, again, is if somebody says put the XYZ indicator on your chart, you can put it on, and if it enhances the signals, you keep it there. The 8 exponential moving average you can put on your chart on any chart that you're using, just like putting on the 50-day simple moving average. And it was brought to me by one of my first private training students, Rick Sadler, who worked with me or worked for me for a couple years. He moderated the room for me. And then he went and started his own website, but it's more of a scalping website using candlesticks. And after he came down for his private training from Anchorage, Alaska, to my office in Houston, Texas, we sat in front of the screen for 2.5 days. And after about 6 weeks, he called me and said, I found another indicator. Put the 8 exponential moving average. We didn't have a name for it then, but when he started working for me, we called it the T-line or the trigger line or the trade line. So if somebody says put the XYZ indicator on, I put it on there. If it helps, I keep it there. If it doesn't, I move it back off. So no, it's not anything, nothing about candlesticks. I imagine a lot of people get emails saying we've got the new secret on how to make money in the markets. Well, I can't do that because there's nothing new or secretive about candlestick signals. They've been around for hundreds of years. The only thing we need to do is learn how to use them effectively. Do S&P futures? Not necessarily, JC. As far as the S&P futures. I'm still hanging still. All right, in Chipotle. DEV, DCEV looks like a double bottom, but remember, it's the pattern is what gives us the information of what we might want to do. The signals tell us exactly what to do. So right now, it's having a little bit of difficulty. If it opened lower tomorrow, I'd close it out and find someplace better. IAU, oh. Be ready to short this one. Boeing, nothing wildly exciting here. If you're long, you can stay long, but you want to use the T-line as your stop. LPLA. All you can do here is stay long on that fry pan bottom. Observe the obvious. Look at the hammer bouncing right off the 200 and started trading positive. There was your breakout. Now all you can do with a fry pan bottom is use a very simple T-line rule. You stay long as long as you don't see a sell signal and a close back below the T-line. TMCI. We did this one, right? If this opens lower, you can be shorting it, giving you your Dagwood. HCA, that's your evening star signal with a big shooting star. Shouldn't we wait to short this to see if it finds support as low at the low we had on the 20th when it tested the 50? Why? You know they're selling it off. Why don't you short it and then see what it does? Likely it's going to go back and test the 50. Then you can always see what type of signals form at that level. Well, let's just take a gander at the... Can you check in? At the end there was a doji yesterday. Now on the SPY anyways, the doji today, but your stochastics are still heading down. You might have supported on the 50, but again, very simple rule. The doji rule. They're going to probably move it in the direction how they open this after the doji. And Melly, observe the obvious. Where were the sell signals? As soon as they hit the 50, there's your hanging man, there's your doji, there's your bearish confirmation of those signals, and in the overbought area heading down. So when you saw that, if you saw a hanging man signal, you knew that if they opened it lower the next day, it was time to take profits. The fact that they closed it below the T-line after failing to the 50 showed you not only was it time to take profits, but more than likely wave 1, wave 2, wave 3. Regarding the last gap, it is NIO, okay, which has sunk to the 1028, so that might be support. Asking for a friend. I mean, yes, you could consider that, except that probably has very little relevancy of what's going on in investor sentiment right now. Which is, there's your bearish left-right combo. In this case, they failed at the 34 EMA, which I use because it works reasonably well. Right now, I would not be long NIO. If I was short, I'd stay short. If I was thinking of going short, I'd probably short it at this level, telling you the next wave is starting. This one, same scenario. Where did they fail? At the shooting star Harami. That failed right at the 50. Then they've closed below the T-line. If this opens lower, where do you think your first target is? Right here. And then if this candle is the same, that means they could take it down pretty quick right to the 200. Mac, there's an annual membership. Yes. So if you email Abraham, he can give you the whole lists and of the different prices. What time does the trading room open and close? Judy, it stays open all the time. Now, people start coming in half an hour, 45 minutes before the market opens and start throwing around ideas. I come in with, first of all, I put out 2 or 3 stock picks every night on a video format, not so that you have stock picks, but so you can see what the explanation was in the format to say why it was being recommended, kind of give a quick dissertation of whether we think the market is heading up or down. That means around 9:30, 10 o'clock, I'm already texting in the room in here, saying you could buy XYZ or would hold off buying anything because the market's trading lower. Then I come in around noontime. We got 2 chat rooms. One's an option room. We have around 25 people in there. And then the main room is about 170 people on average. And I'll come in around noontime, and we will usually supposed to spend an hour, but I make people starve, and we go to sometimes further than that before every sandwich for lunch. And then I'll come back in around 15 minutes before the market closes to say, all right, you want to be closing this one out or keep an eye on this one for tomorrow. But the room is always open, and there's always people throwing ideas back and forth. Coca-Cola. You have a doji in the overbought area. You're still in an uptrend. I would have a safety stop just below today's low. If it comes down through there, your evening star signal is starting. Oh, Jake, I don't know if that's going to come up here. CFRUY. No, that doesn't come up on this system. H. You've got sell signals. You're sitting right on the T line. Kind of a doji. Still puts you in the same parameter, but it's going to move in the direction of how they open after today's doji. I'll try that one. EPAZ22. Nope. Maybe it's EPZZ22. Nope. Doug, are you in here tonight? It could be ESAH22. Okay, that's better. Is that? No, that's the automobiles. All right. I'll have it by next week. I don't trade it. Nicholas, they're only in hard copy. Guess we could do it in ebook, but we never did. Boy, I've kept you way past bedtime. Trend kicker. Right there. That's relevant. So that's your fry pan bottom breakout. You could still buy this one. Julia, there, go roll that hot dog in the snow. JP Morgan, that's a toughie. That does not look good. If I was long, it has to stay above the 50. It's just not a good looking chart. You can't really tell what they want to do with it. MIME, that's not a good looking chart either. That's as flat as a pancake. And Pfizer, did I do that one right? It looks like it. Pfizer, stay short. Play by the rules is what you need to do. Make up your rules and stick with them. And that's what Candlesticks did for me. It kind of solidified my discipline by knowing that this is what the chart is telling me, and the probabilities of what it should do can be expected. And if I don't do what the chart tells me to do, then I'm going against the probabilities. And I learned a long time ago, do what the chart tells you to do. SAN, just stay long. BABA, you can stay long as it stays above the T line. Another trend kicker on the regional finances or financials, stay long on that trend kicker. Medtronics. Kind of your shooting star, close below the T line. If you're long on this one, it has to open positive and trade positive. If it opens lower, close it out. TTCF, do the doji rule. A long-legged doji, if it opens positive, kind of this area right here is acting as support. I don't know what that line is. Get ready to take profits if you're short if it opens positive tomorrow. Facebook, kind of a nothing chart. It's not going anywhere. I'd be someplace else. Another Doji Harami. If I was short, I'd have my safety stop just above today's high. It shouldn't come up through there. We did this one. It's only a $20 stock. Does it make sense to short something that at that level? If it goes from 20 to 10, that's about the same as a 200 stock going to 100. Or the old question, which is heavier, a pound of lead or a pound of feathers? Yeah. Except right now you can see there's nothing there. That's a nothing chart on Y. That's a nothing chart. NIO right now is kind of a nothing chart. Yeah, it wouldn't be in those charts right now. Yes, Judy, yeah, the chat room is part of the membership. Raymond, what's our symbol for trading the E-minis? Lucid, that's a nothing chart. Wouldn't be long or short. Tesla, I'd stay short, especially if this opens lower tomorrow. I wouldn't want to see it trade back up above the T line. TPH, There we go. All right, so you can see it's trading lower. Now if I flip to my 10-minute chart, right now it's not telling us much, but depending on how active you want to trade it, might trade it off the 5-minute chart, and I would use, if I was trading it fast, off the 5-minute and the 1-minute chart. Nicholas, no, it's just a night that we do in the members area, where if enough people say, can we work on options again, I set up and we do an hour, like one of these sessions, strictly on options. JC, yes. Each night I put out 3 or so recommendations. Now, if I think the market's going up, it might be 3 long and 1 short. If I think the market's going down, it might be 3 shorts and 1 long. If the market's moving sideways, you might see 2 longs and 2 shorts based upon how the market opens the next day. Apple, if this opens lower, you can figure they're at least coming here and then possibly down to the 50. Yeah, we can do an options night. Okay, so the Dow Futures are up about 51 right now, which doesn't mean anything. Yes. Are there, yeah, you can go back, I'm sure. You know, I've never clicked on them. I do them, set them up, send them to Abe, and he puts them in the picks area. And I'm sure you can go back. I think we eliminate them after maybe 7 trading days or so, just because now they're old news. Mike, don't know that. That's been the big question. Who's going to take Big Ben's place? All right. Any other questions on candlestick analysis? The one thing that I always stress to people that you don't have to be a technical analyst. All you have to do is recognize the signals and patterns that the Japanese rice traders illustrated that for buy signals and sell signals. How small percentage of the body has to be compared to the tails before you would call a candle a doji? You call a candle a doji whenever you see visually that it's indecisive. Now that I wouldn't call a doji. That's just a day. That I'd call a doji. That I'd call a doji. When you can see that the body is relatively small. There's no percentage. It's just visually seeing that there was indecision between the bulls and the bears. Okay. Mike, every chart looks exactly the same. A little more lengthened than some I've found. Oh, again, the length of the chart doesn't really matter. This is what we're looking at. I could look at this chart and at this magnitude or at this. It doesn't really matter. It's just I want to be able to see what's happening right now. Yeah, I think we found them. Whoops. Doug. Yeah. Last is Amazon for a long. No. I guess, Richie, I would just ask the question, why would you go long on this chart? Stochastics still not in the oversold area. You don't have a buy signal. All you can assume with it being below the T line is that you're still in a downtrend until you see a buy signal. Okay, wow, I've kept us way past time. based on a monthly or weekly trend. Again, it depends on the time frame that you're trading. If you're a swing trader and you're only going to own it for 2, 3, 5, 7 days, the weekly chart and the monthly chart aren't going to mean anything because it's what's happening in the daily that you're concerned with. If you're planning to buy Amazon and hold it for 6 months, yes, you might look at what the weekly and monthly chart look like. If you day trade, how do you set it? Oh, I forgot that. I don't. This chart right here, let's see, let's go back to, since I was trading wheat today. This is the daily chart on wheat. All I do is click this, and the chart is exactly the same. Nothing changes on any of these parameters. So if I'm trading something, I say, well, we should be in a downtrend, and I just flip to my 10-minute chart, which looks exactly the same as the daily. All the indicators are exactly the same. And remember, what the most important decision is on your chart. It's the signal itself, and then what all the confirming indicators are doing. So basic pattern, doji, basic pattern. Open close might have upper and lower wicks, a sign of indecision. Open close do not have to be exactly the same. No, they just have to be very close. That's a doji. Anything that kind of represents an indecisive trading day where it's opening and closing pretty close. Okay, everybody, I guess I've talked your ear off for 2 hours. We'll see everybody bright and early in the chat rooms tomorrow. We'll see you then.